REITs have rallied significantly in recent months, and I think that now could be a good time to take some profits. I'm still bullish on most REITs. I have about 50% of my portfolio invested in them, but the reality is that not all of them are worth buying, especially after the recent surge. Hey everyone, this is Jussi. I'm a CFA charter holder but not a financial advisor, so make sure to do your own research. I run a small investment firm that specializes in REIT investing, and in today's video I'm going to talk to you about 3 REITs that I would consider selling, and I'm also going to discuss some better alternatives for your portfolio, so make sure to stick till the very end of this video. But before I get into it, I want to remind you that we are still for limited time offering a 2-week free trial for our REIT newsletter. So if you want to access my entire REIT portfolio, now is the time. I'll put a link to it in the description of this video. So the first REIT I would consider selling is called Empire State Realty Trust, ticker symbol ESRT. This is the owner of the Empire State Building in New York City, and this trophy asset has attracted a lot of investors to buy the shares of this REIT. As a result, it's today priced at a small premium relative to its close peers, SL Green and Vornado Realty Trust, which are also REITs that specialize in office space in New York City. But I think that it should be the opposite. Yes, it is true that the Empire State Building is very attractive. This is clearly a trophy asset, but the market needs to realize that ESRT is a lot more than that. It owns a large portfolio of office buildings, and a lot of those are older Class B properties that are facing significant pressure from the work from home trend. On average, I believe that the assets of SL Green and Vornado Realty Trust are quite a bit more desirable, and they deserve a premium valuation. Moreover, the Empire State Building also has an observatory deck, which generates significant revenue for the REIT, but there's now growing competition also in this space in New York City, and so this is another headwind for the REIT that SL Green and Vornado Realty Trust do not have. And so I think, in short, the market has simply gotten it wrong. ESRT should be priced at a discount relative to SL Green, and yet it's priced at a premium. In my opinion, the best pick in this specific sector is SL Green, ticker symbol SLG. This is an office REIT that specializes in Manhattan. It's the biggest office landlord down there, and I like it because its valuation is low. It's now entering the asset management business. I think that they're going to have a lot of success in fundraising, which is going to allow them to grow new fee income. It's not a REIT that I'm buying for my portfolio today, but I think that it's a lot more attractive than ESRT, and for this reason, if I own the position, I would consider selling it. Before I go into the second REIT, could you please do me a huge favor and click the like button? That really helps me to grow this channel. Thank you very much. Then the second REIT I will consider selling is called Orchard Island Capital, ticker symbol ORC. This REIT is very popular among individual investors, and that's because of one main reason: it's offering a 17% dividend yield. But even then, I have no interest in owning shares of this mortgage REIT, and that's simply because I think that its business is uninvestable today. It's too heavily dependent on unpredictable macro factors like interest rates, their spreads, their directions. Its business is also over-leveraged, and as a result, it's going through these boom and bust cycles, and it's not able to generate predictable returns for shareholders. If we now look at its track record and go 10 years in the past, you'll see that it has generated a negative 35% total returns to its shareholders over the past 10 years, despite paying significant dividend income. And so yes, it's true that you're getting a high dividend yield, but what's really the point of that if it's causing significant value destruction and the share price keeps going down at the same time that you get that yield? But to be fair, it's not just this specific REIT, it's the entire mortgage REIT sector has done really poorly over the long run, generating very small total returns for their shareholders. And again, this is simply because they use too much leverage and they are too heavily reliant on macro factors that are out of their control. And so if earning a high yield is important for you, I think that there are better opportunities in today's REIT market. A good example that I recently covered in a video is called NewLake Capital Partners, which is one of the leading cannabis net lease REITs. It's today offering a roughly 10% dividend yield, and it's actually able to keep on growing. It just recently hiked its dividend once again. Also unique to this REIT, it has no debt whatsoever on its balance sheet. It's buying back shares, and there are many other attractive characteristics about it. I'll put a link in the description if you want to watch that video about NewLake Capital Partners. Before I go into the third REIT, let me know in the comment section what REITs you are buying today. And then the third REIT that we'll consider selling is called Welltower, ticker symbol WELL. This is a high quality blue chip healthcare REIT that owns mostly senior housing, medical office buildings, life science buildings. It has a strong BBB+ investment grade rating, very good track record. I really don't have much negative to say about this REIT, but the main problem here really is valuation. It's one of the few REITs that's priced today near all-time highs. It's trading at around 25 times FFO, a 2.5% dividend yield, give or take. And so I think that the risk reward is relatively poor here compared to other REITs, which are today heavily discounted for the most part. There are a lot of other healthcare REITs that also own desirable assets, have strong balance sheets and good management teams, and yet they are priced at much lower valuations. To give you two examples, the leader in the medical office space is called Healthcare Realty, ticker symbol HR, and it's today priced at around 11 times FFO. And then there is National Health Investors, ticker symbol NHI, which is a pure play on senior housing, and yet today it's priced at just 13 times FFO. And so if I wanted to invest in senior housing and medical office buildings, I would much rather own a combination of these two REITs as an example, rather than buy shares of Welltower. So the whole point of this video was to show you how important it is to be selective when investing in REITs. Just because some REITs are heavily discounted doesn't mean that all REITs are worth buying, and I think that these three REITs are good examples of that. And then finally, if you want to access my full portfolio, now could be your last chance to join us for a 2-week free trial at High Yield Landlord on Seeking Alpha. We may discontinue this free trial offer in the future, so don't miss this chance. And then once more, if you could please click the like button, that really helped me a lot to grow this channel. Thank you so much for all your support. I really appreciate it, and see you at my next one. Bye bye.